Welcome. In this video, where is the long-term direction of Zbcn coin? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. One of the most striking technical structures observed on the chart is the ascending trend line. Such trends offer strong clues about the direction of the market and provide important signals that positive price movements may continue. When examining the current technical formation, it is clearly evident that the price is under the influence of an upward trend. This ascending trend line has acted as a support multiple times in the past, each time leading to upward price movements. Currently, the price is once again very close to this trend line, which could potentially signal an upward bounce. Ascending trends indicate that the market is under the control of buyers. Especially when the price bounces upward each time it touches the trend line, it shows that buyers view each pullback as a buying opportunity and that they have confidence in the market. This environment of confidence plays a crucial role in driving the price to higher levels. When evaluating the current situation, it is evident that this ascending trend line remains technically intact and that the price is once again approaching this line. Following this contact, there is a strong possibility that buyers will step in once more to push the price higher. Such ascending trend lines are significant not only in terms of price action, but also in terms of investor psychology. Investors tend to view this trend line as a point of confidence. As the price approaches this line, interest from those looking to take positions in the market increases, bringing about buying pressure. This area becomes even more critical if there is a known history of upward moves from this level. The current proximity of the price to this important level may serve as a signal for many investors to enter the market. Ascending trend lines are considered dynamic supports in technical analysis. Unlike static horizontal support levels, these supports move upward over time. This means that as time passes, the minimum price level needed to maintain the uptrend also increases. This structure points to the presence of a healthy upward trend in the market. At present, this ascending trend remains valid, and the price continues to respect this line, making a bounce from here a strong possibility. Additionally, touches to these types of trend lines do not only create short-term buying opportunities, they also form the basis for medium and long-term strategies. If the price begins to move upward after touching this trend line and that move is supported by volume, the likelihood of a continued uptrend increases significantly. These scenarios are also important for restoring investor confidence. When the price respects a specific technical structure, it validates the forecasts of technical analysts and boosts overall market confidence. In the current technical outlook, the ascending trend line is very clearly visible on the chart. Looking at past price movements, it is evident that this trend line has been tested multiple times and that each test resulted in upward movement. This demonstrates how strong and valid the trend is. In technical analysis, the repeated effectiveness of such patterns increases the reliability of formations and indicators. So this trend line is not just a visual element, but a fundamental structure that determines the direction of price. Each time the price touches this trend line, it also marks a moment of decision. At that point, investors focus on whether the price will react. If the price begins to bounce upward from this area, it could signal the beginning of a new wave of buying. If this type of move is also accompanied by increased volume, then the technical bounce may not just be a temporary reaction, but rather the start of a new uptrend. But of course, we cannot base our analysis solely on trend lines. Let's take a look at other metrics as well. Stay tuned. One of the most notable technical structures observed on the chart is a bearish order block located at the upper price levels. These types of zones are areas where sellers have previously entered the market strongly, causing sharp downward reactions. Therefore, from a technical analysis perspective, these areas are not only key resistance zones that must be closely monitored, but also play a significant role in determining market direction. In the current formation, the price has steadily risen over time and has now reached this order block. While this clearly shows the strength of the upward momentum, the possibility of some consolidation or sideways movement at this level should also be considered. However, this is not a negative scenario. On the contrary, it is a period of gathering strength and psychological and technical preparation for a potential breakout. Although bearish order blocks appear to represent selling pressure, they are actually critical zones that could form the foundation for the next leg of an uptrend. It's true that price rarely moves through such areas effortlessly, but if these blocks have not been tested before, or have only been tested once, there's a strong likelihood that they will break upon being revisited. This sends a signal to investors. If the price is approaching this strong resistance zone again with conviction, it is one of the clearest signs that the uptrend is still intact. The current proximity of the price to this bearish order block is seen by many technical analysts as a positive development. This area serves as a major test of buyer strength. If the price has approached this zone with strong volume and is attempting to hold its ground, it likely means a breakout is near. Of course, in some cases, these blocks may not break on the first attempt, but that is not a negative outcome. These areas can be tested multiple times, and during those tests, the behavior of market participants is closely analyzed. Each test slightly weakens the seller's strength, eventually leading to a breakout that pushes the price to higher levels. To explain this process with a metaphor, it's like slowly but steadily pushing against a large door. It may not open on the first try, but each push loosens the lock a bit more. Eventually, the door swings wide open. The price approaching a bearish order block is exactly like this. The initial touch may not be enough, but if there is belief, momentum, and supporting volume in the market, the zone will likely be surpassed over time. The significance of such resistance zones goes beyond just a temporary pause in price. A price movement that breaks above these blocks is considered a strong breakout signal in technical analysis. When price moves past these structures, sharp and high-volume upward movements are often observed. This shows that buyers have taken control of the market and that selling pressure has been overcome. It indicates that major obstacles have been removed and higher targets are now in play. These kinds of key levels are also zones where large investors restructure their positions, hedge funds activate strategies, and algorithmic systems engage. Therefore, it's quite natural for the price to consolidate in this area for a while. This consolidation process increases investor confidence and supports a healthy market structure. When price spends time at a resistance zone, it helps digest that level and lays the groundwork for a new wave of upward movement. The current chart structure reflects exactly this situation. The price has moved upward with strong momentum and has reached the bearish order block located in the upper region. This shows that the market is in a healthy upward trend. The ATR indicator, which has a very important place in technical analysis, is one of the most valuable tools that measure volatility in the markets. The basic logic of ATR is that it shows how much prices change per unit time. In other words, it examines how wide a range the price moves and how this movement changes over time. In this respect, it is a benchmark that investors frequently use both in risk management and in analyzing market volatility. In the current chart view, the level of the ATR indicator is quite remarkable. If the ATR value starts to trend upwards, this indicates that the market activity may increase, which may lead to stronger price moves. A rising ATR usually indicates that prices are moving in a wider range rather than being stuck in a narrow band, providing more opportunities for traders. This is especially important for traders because increased volatility means that prices can make sharp moves both upwards and downwards. However, the current technical outlook suggests that this volatility could develop in a way that supports upward price movements. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.